time for us. How would you view the overall budget for NBFCs? What were the key positives and negatives in the budget?
So from an NBFC perspective, I think it's a very positive budget that, first of all, there is a lot of mention about how NBFCs are important and what they can really contribute to the growth and therefore the attention on NBFC. And the specific, therefore, for NBFCs, if you look at the first 10% credit loss pickup by the bank, by the government is extremely good, which actually can support a lot of liquidity availability to NBFC. Directions to banks and mutual funds to be able to provide sufficient funds to NBFCs. And more importantly, well-run, well-governed, very focused NBFCs, I would think will have a good run going forward. I personally think it's been a very positive budget from an NBFC perspective.
Right. FM has specifically announced 1 lakh crore during the current financial year. Do you think this is sufficient to give the necessary boost and improve the liquidity scenario?
I think one way to look at it is not to kind of look at is it sufficient or otherwise. I think one way to really look at it is that this is a great first step and a new initiative. And this is not the only source of money for NBFC, but this is going to be a new source. So clearly, I think this would add to the overall liquidity situation for NBFC, and we view this as a good positive.
Do you see the cost of funds coming down post, the easing on those bond yields and steps that have been taken as well to address liquidity for banks and NBFCs?
I would think so. I think the scenario is definitely getting ready for the interest rates going down. And as we already see that, the interest rates have dropped by at least 15 basis points. But finally, we must look at from a banking source, the interest rate will come down once their cost of borrowing comes down. But clearly, the scenario is set for interest rates to come down.
Sure. Now, the Finance Minister did emphasize that funding should be made available to fundamentally sound NBFCs by mutual funds and banks. Do you see this benefiting you, and is there a case of margin expansion here on?
So clearly this would benefit large and well-run NBFC with very focused business models. For example, in our case, we've been very focused on retail, semi-urban, rural, auto, tractor kind of industry that we are working with, financing individuals. And asset quality has been good, margins have been good, our returns have been decent. So I think put all of this together, but more importantly, very highest level of governance and practices. So I would think that well-run NBFC with such clear focus should stand to benefit. Now, so far as margin expansion is concerned, I think this would come from the cost of funds that would be charged to us when banks and mutual funds provide money. But more importantly, what we were all looking for at this stage is the liquidity support to be able to participate in the retail growth, which over a period of time will kind of culminate into improvement in margin.
Mr. Iyer, we've already seen bond yields easing nearly 15 basis points post the budget. Do you see greater monetary transmission now post the budget from banks to NBFCs improving? And will the cost of borrowing for NBFCs come down?
So clearly NBFCs have been a borrower from the banking system, and we have been talking about it for some time, how the additional support needs to be provided. And I think this is in that direction. And once the liquidity is made available by the banking system to the NBFCs, you would once again see consumption return back, and that would yield to everything positive.
And the budget has proposed more regulatory powers to the Reserve Bank over NBFCs. What do you think are some of the immediate steps that you expect the RBI to take on liquidity and to improve the regulatory framework as well as compliance?
I think if you kind of already look at RBI has taken the first step of directing the banks to look at anything in surplus of the GSEC held to be considered for NBFC lending. I think in similar direction, RBI would be in a greater position to look at what are the support required by NBFC, which are the NBFC which would require this kind of support, and what kind of business or models do these NBFCs run. I think there'll be more focused approach, and therefore necessary direction will go into the financial system, which would help respective NBFCs to be able to get the support from the banks or from any other entities.
Right. NBFC were always lightly regulated and were able to spur the credit growth in the economy. In your opinion, does the regulatory framework, measures like banks for NBFCs, would impact the growth?
I think it's a misnomer when we say that, NBFCs are very lightly regulated. I think if you look at over a period of time, NBFC's regulations have been tightened to an extent that we are almost in line with clearly the banking system. Yes, may not be exactly in every form and means, but we have actually a higher capital adequacy requirement. Our NPAs are on a 90-day basis. So I think it's important to recognize that over a period of time, NBFCs have been very, very tightly regulated. Our belief has always been more regulation not necessarily means it will slow down things. I think it's important to look at what are these regulations, how they are going to benefit the model on a long-term basis, and all of us have to learn this art of factoring them in the business models. And once you do that, then it actually stabilizes the industry better.
Okay. The FM also announced various steps to boost affordable housing, MSMEs, the rural sector, for example. How positive are these announcements as you see it, and particularly for demand as well going forward?
I think it's a great positive. I mean, I would think that, this is how the growth can return back. I mean, if you look at SMEs and MSMEs are going to be supported, or the rural housing is going to be supported, all of this will clearly lead, first of all, to even higher level of employment. It will lead to better deployment of assets and use. Eventually, it will lead to better cash flow generation, which will eventually lead to consumption. So I think it's a great start point. And if one can really follow this path, we believe that it's a return of growth economy for rural is visible.
Now, Mr. Iyer, private investments in the economy had come down. Do you think that the budget has actually taken steps or spoken about measures to boost private investment, and thereby we can see some sort of a capex recovery kicking in?
I think clearly from the infrastructure perspective, whether it is on the waterfront, whether it is irrigation, whether it is roads, I think all of this infrastructure would clearly see additional investments going in. And it will also see better deployment of asset acquisition, better use of assets, as well as better deployment of labor. I would think clearly capex is visible on the infra front.
Appreciate you coming by and giving us your view on the overall outlook for the NBFC sector as a whole, as well as what it means for your company.